Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a general upward trend, with the recent price hovering around the support price. The forecast price also indicates a positive trajectory, suggesting continued growth in the coming weeks. Therefore, I recommend entering a long position at the current price of $69,400. To manage risk, set a stop-loss order at $68,300, which is the recent low point. The target price should be set at $72,700, which is the recent high point and aligns with the resistance level. This strategy capitalizes on the bullish outlook for Bitcoin, while mitigating potential losses. It allows for a potentially significant return on investment over the long term, as the price is expected to move towards the resistance level. The provided data for Ethereum suggests a cautious approach to investing. While the historical price shows some fluctuations, the recent 2-week trend indicates a downward movement. The forecast further reinforces this bearish outlook, projecting a continued decline in price over the next week. Considering these factors, a short-term short position seems like the most suitable strategy. To execute this strategy effectively, an entry price of $2,540, aligning with the forecast's lowest point, would be appropriate. A stop-loss order should be placed at $2,630 to limit potential losses if the price unexpectedly rebounds. Target price could be set at $2,430, reflecting the potential downside indicated by the forecast and historical price movements. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Ripple, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, and the forecast indicates further declines in the coming week. Although Ripple is hovering near its support price, the resistance level is relatively far away, suggesting limited upward potential in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.525 would allow you to enter the trade near the current price, but slightly above the support level, minimizing the risk of an immediate price reversal. The stop-loss should be set at $0.535 to protect against any unexpected price surge. The target price should be set at $0.505, slightly above the support level, allowing you to take profits before the market hits major support. This strategy allows for a potential profit while mitigating risk in a volatile market. Given the historical price data and the provided forecast for Solana, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting consolidation. The forecast, although slightly bearish, projects a price point above the current market value, indicating potential for growth. Therefore, an entry price of $170 would be ideal, allowing for a purchase before the potential price increase. The stop-loss should be set at $166, providing a buffer against unexpected downward movements. The target price should be set at $179, aiming to capture the potential upside movement towards the resistance level. This strategy capitalizes on the short-term bullish momentum, while mitigating risk through a well-defined stop-loss. Given the provided price history, forecast, support, and resistance levels for Cardano, a short-term investment strategy appears most suitable. Price history shows recent fluctuations around the $0.35 mark, with the forecast suggesting a slight dip towards the end of the period. This indicates a potential for short-term profit, taking as the price may pull back towards the support level of $0.3451. Therefore, a short position is recommended with an entry price around $0.356, slightly above the current price. The stop-loss should be set at $0.3654. The resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.3451. The support level, aiming to capture the potential downward movement. This strategy capitalizes on the anticipated short-term price correction, while managing risk effectively. Given the price trends and forecast for SU Coin, cautious investment strategy would focus on a medium short-term approach to capitalize on the potential for a gradual price increase. The historical prices show some volatility, but the recent downward trend suggests a potential consolidation period. The forecast indicates a slight upward movement, with prices potentially reaching around $2.03 in the coming week. The support price of $1.7536 acts as a crucial floor, while the resistance at $2.0879 presents a potential ceiling for the short term. Therefore, a long position is recommended with an entry price around $1.90, aligning with the recent price dip and providing a buffer below the support level. A stop loss at $1.80 would safeguard against a deeper decline, while a target price of $2.10 allows for potential profits as the price approaches the resistance level. This strategy aims to capture a moderate gain within a time frame of a few weeks, acknowledging the inherent volatility of the cryptocurrency market. Based on the provided price history and forecast for Filecoin, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a downward trend over the past 2 weeks, with the forecast predicting further declines. The current price is hovering near the resistance level, suggesting a potential for a pullback. Therefore, an investment strategy involving a short position on Filecoin is recommended. A suitable entry price would be $3.57, aligning with the resistance level. The stop loss should be set at $3.63, slightly above the entry price, to minimize potential losses. The target price would be $3.41, the support level, aiming to capitalize on the anticipated price decline. This strategy allows for a quick entry and exit, taking advantage of the short-term bearish momentum in Filecoin. Based on the provided price information for Theta network, a bearish investment strategy appears most suitable. The historical price data reveals a consistent downward trend, with recent prices hovering near the lower end of the range. The forecast further reinforces this bearish outlook, predicting continued price declines over the coming week. The current price sits comfortably above the support level of $0.947, providing a potential entry point for a short position. Considering the price dynamics, a short position with an entry price around $1.15 would be prudent. To manage risk, a stop-loss order should be placed at $1.222, the resistance level, to limit potential losses if the price unexpectedly surges. The target price for this short position should be set at $1.08, aligning with the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline, while effectively mitigating potential risks. Given the price trends and forecast for Dogwifhat, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Dogwifhat could drop from its current price to as low as $2.19. The support price is at $1.5, indicating a potential floor for the price. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $2.45 aligns with the forecasted price and current market conditions. The stop loss should be set at $2.59 to protect against any unexpected price recovery. The target price should be set at $2.15, slightly above the forecasted lowest price, allowing you to take profits before the market potentially hits the support level of $1.5. Based on the provided price information for Stellar, a short-term bearish strategy appears most suitable. The 2-week price history reveals a downward trend, and the forecast predicts further declines, while the support price sits at $0.0924. The resistance level at $0.0968 suggests limited upward potential. Considering this, a short position would aim to capitalize on the anticipated price decrease. An aggressive entry point for this short-term strategy could be around $0.0948, aligning with the current price and the recent price action. A stop-loss order should be placed at $0.0968, above the current price and the resistance level, to limit potential losses if the price unexpectedly rises. The target price for this trade could be set at $0.0924, the support level, aiming to capture a significant portion of the anticipated price decline. This strategy prioritizes capitalizing on short-term market movements and exiting the position before potential price reversals. Given the price trends and forecast for Starknet, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $0.356. The forecast suggests Starknet could continue to decline, reaching as low as $0.356 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.375 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.38 to protect against any unexpected price recovery. The target price should be set at $0.35, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.356. Based on the provided information for PENDLE, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent dips and climbs. The forecast indicates a slight upward movement in the coming week. Considering the support price at $3.729, and the resistance price at $4.928, a cautious approach is recommended. Therefore, a long position is suggested, aiming to capitalize on the potential upward movement. An entry price around $4.55, slightly below the current price, allows for a margin of safety. The stop loss should be placed at $4.35, below the support price, to minimize potential losses. Target price can be set at $4.85, aligning with the resistance level and offering a reasonable profit potential. This strategy allows for a medium-term hold, benefiting from the potential price appreciation while managing risk effectively. Based on the provided information for render, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a downward trend, and the forecast predicts further declines over the next week. The price is currently close to the support level, suggesting a potential for further downward movement. Therefore, a short position is recommended to capitalize on this anticipated decline. A conservative entry price could be set at $4.75, slightly above the current price and below the resistance level. The stop loss should be placed at $4.85 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $4.45, aiming to capture a portion of the predicted decline. This strategy prioritizes risk management and aims to generate modest profits from the expected price decrease in the short term. Given the price trends and forecast for VeChain, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price sits at $0.01998, suggesting a potential floor for the price. However, the resistance at $0.02142 indicates limited upside potential in the near term. Considering these factors, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $0.0215 would allow you to enter the trade near the current price, while allowing for a small margin of safety above the resistance level. The stop loss should be set at $0.0223 to protect against unexpected upward movements. The target price should be set at $0.0205, aiming to capture a portion of the anticipated decline while staying above the support level. This strategy prioritizes risk management and aims for modest gains in a volatile market environment. Based on the provided information about Binance Coin, a cautious approach with a medium-term investment perspective appears most suitable. The 2-week price change demonstrates a mixed trend, with fluctuations around the $580 range, while the forecast suggests a continued downward movement in the coming week, reaching potentially as low as $567. The historical data shows resilience near the support price of $545.5. Therefore, a long position is recommended with an entry price around $575, a stop loss at $560, and a target price of $600. This strategy aims to capitalize on a potential rebound after the predicted short-term dip. while mitigating risk by setting a stop loss below the forecast low. The target price aligns with historical resistance levels, providing a realistic profit target. This approach balances the potential for moderate gains with a manageable risk profile, aligning with a medium-term investment horizon. Based on the provided price data for Conflux, a cautious short-term investment strategy is recommended. The 2-week price history shows a downward trend, and the forecast suggests further declines, while the support price at $0.133 might provide a temporary floor. The historical data and the downward trajectory of the forecast indicate a higher probability of Conflux continuing to fall. Therefore, a short position would be the most suitable strategy. An entry price of $0.144, slightly above the current price, allows for some room for potential price fluctuations before entering the short position. A stop loss should be set at $0.152, above the current price and close to the recent resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.133, aligning with the support price, aiming to capture potential profits from the anticipated decline. Based on the provided information for Worldcoin, a cautious short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a downward trend, and the forecast projects continued declines in the coming week, while the support price sits at $1.609. The current price is significantly above this level, indicating a potential for further downside movement. Therefore, an investment strategy involving a short position is recommended. A conservative entry price would be around $2.05, aligning with the forecast downward trajectory. The stop loss should be set at $2.1, slightly above the current price, to limit potential losses. Target price could be set at $1.85, aiming to capitalize on the anticipated decline towards the support level. This strategy prioritizes risk management, while seeking to profit from the predicted bearish trend in Worldcoin. Given the 2-week price change and 1-week forecast for Avalanche, a cautious investment strategy is recommended. The historical prices show a downward trend, with the forecast suggesting further declines. Price is currently hovering near its support level of $23.28, indicating potential vulnerability, while the resistance level at $25.36 suggests some upward potential. The overall trend suggests a higher probability of downward movement. Therefore, a short position is advisable to capitalize on the anticipated price decline. An entry price of $24.50, slightly above the current price, allows for a buffer against immediate price fluctuations. The stop loss should be set at $25.10 to limit potential losses if the price unexpectedly rises. The target price can be set at $23.00, aligning with the support level and allowing for a reasonable profit margin. This strategy focuses on a short-term investment perspective, aiming to capitalize on the expected price drop within the next week. Based on the provided price information for Jupiter, a cautious investment strategy is recommended. The 2-week price history shows a volatile trend with both upward and downward movements, while the forecast suggests a slight decline in price over the next week. Price remains close to its support level of $0.8191. This proximity to support indicates a potential for price rebound. Therefore, a long position is suggested with an entry price at $0.966, slightly above the recent closing price. The stop loss should be set at $0.95, just below the immediate support level, to limit potential losses. The target price can be set at $0.995, aiming to capture a moderate gain based on the historical price movements and the forecast. This strategy focuses on a short to medium-term investment horizon, allowing for potential price appreciation while mitigating risk through a well-defined stop loss. EOS's price history reveals a downward trend over the past 2 weeks, with the forecast suggesting further declines. The forecast indicates a potential drop from the current price to around $0.415 in the coming week. Given this bearish outlook, a short-term short position on EOS appears to be the most suitable strategy. To To execute this strategy, an entry price of $0.45 would be ideal, allowing you to capitalize on the anticipated price decline. The stop loss should be set at $0.462, slightly above the current price, to minimize potential losses if the market unexpectedly moves upward. The target price should be set at $0.42, taking advantage of the projected decline while leaving room for price fluctuations. This short-term strategy aims to profit from the short-term bearish momentum of EOS. Based on the provided data for TRON, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a consistent upward trend, with the recent price hovering around the support level of $0.1653. The forecast price indicates a potential for further growth, reaching $0.17 within the next week, while the resistance level of $0.1695 presents a potential ceiling for short-term gains. The medium-term outlook suggests a sustained upward momentum. Therefore, a long position is recommended, aiming to capitalize on this potential growth. An entry price of $0.166 would allow you to buy in close to the current market price, while still leaving room for potential price appreciation. A stop loss at $0.164 would protect your investment from significant downside risk, while a target price of $0.172 would allow you to secure profits as the price approaches the resistance level. This strategy balances risk and reward, offering the potential for moderate gains over a medium-term horizon. The provided data suggests a bearish outlook for C in the short term. The historical price shows a downward trend, and the forecast indicates further declines. The price is currently close to its support level of $0.3726, suggesting a potential for further downside movement. Given this, a short position is advisable. An aggressive short-term investment strategy would involve entering a short position at the current price of around $0.386. The stop loss should be set at $0.396, above the current price and the forecast high. To protect against unexpected upward movement, the target price could be set at $0.367, slightly above the recent low and the support level, allowing for potential profit before the price potentially bounces back. This strategy aims to capitalize on the anticipated price decline in the short term. Given the price trends and forecast for Shiba Inu, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.0000164. The forecast suggests Shiba Inu might continue to decline slightly in the coming week. This indicates a slightly bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An entry price of $0.000179 aligns with the recent price action and the forecast. The stop loss should be set at $0.000182 to protect against any unexpected price recovery. The target price should be set at $0.000167, allowing you to take profits before the price hits the major support level. This strategy aims to minimize risk while aiming for modest gains in the short term. Given the provided Dogecoin price history and forecast, a cautious medium-term investment strategy appears most suitable. The recent price action shows some volatility but lacks a clear, consistent upward or downward trend. The forecast suggests a slight upward movement over the next week, but the price remains near its support level. This indicates potential for both upside and downside risk. Therefore, a long position is recommended, but with a focus on risk management. A suitable entry price would be around $0.145, slightly above the recent lows. The stop loss should be placed at $0.142, below the recent support level, to limit potential losses. The target price could be set at $0.165, aligning with the forecast high and offering a reasonable profit margin. This strategy allows for participation in the potential upside, while minimizing exposure to significant downside risk. The medium-term time frame provides time for the market to potentially move in a favorable direction, while avoiding the volatility associated with short-term trading. Given the price trends and forecast for Hooked Protocol, a conservative investment strategy would focus on a short-term approach to mitigate potential losses. The historical prices show a downward trend, with the current price hovering near its recent lows. The forecast indicates further declines, suggesting a bearish outlook in the short term, while the support price at $0.3359 offers a potential floor. The resistance level at $0.41 suggests limited upside potential. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.395 aligns with the current price and the forecasted downward trajectory. The stop loss should be set at $0.405 to protect against any unexpected price recovery. The target price should be set at $0.36, slightly above the forecasted lowest price, allowing you to take profits before the market potentially reaches major support at $0.3359. Given the historical price data and the downward forecast for Aevo, a short-term bearish strategy seems most appropriate. The historical price shows a clear downward trend, and the forecast predicts further declines in the coming week. The current price is near the high end of the recent range, suggesting a potential for a further drop. Therefore, I recommend taking a short position on Aevo. An ideal entry price would be around $0.33, aligning with the recent price action and the forecast. The stop loss should be set at $0.344, slightly above the recent high, to minimize potential losses. The target price could be set at $0.30, aiming to capture a portion of the predicted decline. This strategy capitalizes on the bearish outlook for Aevo in the short term. Based on the provided price information for Coin, the 2-week price change reveals a downward trend, with the forecast indicating further declines. The historical prices show a consistent downward trajectory, with the current price hovering near the support level of $0.006512. The resistance is at $0.007351, suggesting limited upside potential in the near term. Given this bearish outlook, a short position seems to be the most suitable strategy to capitalize on the anticipated price decline. For an aggressive short-term investment strategy, an entry price of $0.00674 aligns with the current price and the forecast. The stop loss should be set at $0.00703, slightly above the current price, to protect against any unexpected price surges. The target price should be set at $0.00627, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.006512. This strategy aims to profit from the short-term downward movement of Coin while managing risk effectively. Given the price trends and forecast for Coin, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a fluctuating trend with recent dips, while the forecast suggests further declines in the coming week. The support price sits at $0.01727, indicating a potential floor for the price, while the resistance is at $0.01903, suggesting an upper limit for potential growth. In this scenario, a short position is advisable to capitalize on the anticipated price decline. An aggressive short-term investment strategy could involve entering a short position at $0.0185, aligning with the recent price action. The stop loss should be set at $0.019, slightly above the current price, to protect against any unexpected upward movement. The target price should be set at $0.0175, aiming to capture potential downside momentum before reaching the support level of $0.01727. This strategy prioritizes risk management and aims to profit from the anticipated price correction in the short term. First, considering the provided price information and the forecast for PEP, a short-term investment strategy appears most suitable. The recent price history shows a downward trend, and the forecast predicts further declines. The price is currently hovering near the resistance level of $0.0000966, suggesting a potential for a pullback. This aligns with the bearish sentiment indicated by the price movement. Therefore, an aggressive short-term investment strategy would involve taking a short position in Pepe. The entry price should be set at $0.0000965, aiming to capitalize on the potential price drop. The stop loss should be placed at $0.0000975 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.0000890, aligning with the forecast and allowing for a reasonable profit margin before reaching the support price of $0.0000720. Based on the provided price information for TRON coin, a cautious short-term investment strategy appears most suitable. The 2-week price change indicates a downward trend, and the forecast suggests further declines in the coming week. The current price is relatively close to the support price, suggesting a potential for a short-term bounce. However, the overall bearish sentiment and the forecast direction point towards a more significant decline in the near future. Therefore, a short position on TRON coin is recommended. An entry price of $4.95, slightly above the current price, allows for a small margin of safety while capturing potential downward movement. The stop loss should be set at $5.05 to limit potential losses if the price unexpectedly reverses. The target price is set at $4.75. Aiming to profit from the anticipated decline towards the support level. This strategy prioritizes risk management while seeking to capitalize on the short-term bearish outlook for TRON coin. Based on the provided price information for Bitcoin Cash, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent downward trend, with the forecast indicating further declines. While the support price sits at $320.6, the resistance is at $368.9, suggesting limited upside potential in the near term. Therefore, an aggressive short-term strategy would involve entering a short position at the current price, around $359. A stop loss should be set at $368.9, the resistance level, to limit potential losses if the price unexpectedly rises. Target price would be $320.6, the support level, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the current bearish momentum and the limited upside potential in the short term. The Chainlink price history shows a relatively stable price range over the past 2 weeks, hovering around $11. The forecast suggests the stability will continue, with prices remaining in the $11 range for the next week. Considering this limited price movement and the lack of a clear upward or downward trend, a short-term investment strategy is not recommended. The risk of capital loss outweighs the potential for significant gains in this scenario. Instead, a medium-term investment strategy with a long position appears more suitable. We can enter a position at $11, with a stop loss set at $10.53 to minimize potential losses. The target price could be set at $11.29, aiming to capitalize on any upward momentum towards the resistance level. This strategy allows us to benefit from potential price appreciation while managing risk effectively. Based on the provided data for Polkadot, a short-term investment strategy appears to be most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level of $3.649. The forecast further indicates a continued decline, suggesting that the price may drop towards the forecasted low of $3.76 within the next week. Therefore, an aggressive short-term strategy would involve opening a short position at the current market price, with a stop loss set slightly above the recent high of $4.2, around $4.25. This stop loss would protect against any unexpected price surges. Target price would be set at $3.8, aiming to capture a portion of the anticipated decline. This strategy capitalizes on the bearish sentiment reflected in both the historical price data and the short-term forecast for Polkadot. Given the price trends and forecast for Near protocol, a conservative investment strategy would focus on a short-term approach, capitalizing on the potential for a slight price increase. The historical prices show a downward trend over the past 2 weeks, with the current price hovering near its support level. The forecast indicates a continued decline in the coming week, suggesting a bearish outlook in the short term. However, the price is currently close to its support level, which could provide a temporary floor. Therefore, a long position is advisable with a conservative approach. An entry price of $4.10, aligning with the forecast, would be suitable. The stop loss should be set at $3.90, below the support level to mitigate risk. The target price should be $4.30, aiming for a moderate profit before the price potentially drops further. This strategy allows for potential gains while minimizing risk by exiting the position before a significant decline. Based on the provided price history and forecast for stacks, a cautious short-term investment strategy is recommended. The 2-week price change shows a downward trend, and the forecast predicts further declines in the coming week. Price is currently near the resistance level of $1.732, indicating potential for further downward movement. Therefore, a short position is advisable to capitalize on this anticipated decline. An entry price around $1.73, close to the resistance level, allows for a quick entry into the trade. The stop loss should be placed at $1.76, slightly above the current price, to limit potential losses. The target price can be set at $1.64, aligning with the lowest predicted price in the forecast, allowing for a healthy profit margin before the price potentially reaches support. This strategy emphasizes a short-term perspective, aiming to capture the potential price drop within the next week. Based on the provided Aptos price history and forecast, a short-term bearish investment strategy appears most suitable. The historical prices demonstrate a downward trend over the past 2 weeks, with the forecast projecting further declines. The forecast suggests Aptos could fall from its current price range to as low as $8.94, while the support price sits at $5.75. This indicates a high probability of price decline in the short term, making a short position the most advantageous approach. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, which is around $9.22. The stop loss should be placed at $9.4 to limit potential losses if the price unexpectedly rises. The target price should be set at $8.94, aligning with the forecasted lowest price. This strategy capitalizes on the anticipated price decline, while managing risk through a well-defined stop-loss level. Based on the Litecoin price data and forecast, a short-term investment strategy focused on a long position appears promising. The historical price data shows a slight upward trend, with recent fluctuations around the $70 mark. The forecast suggests a continued upward trajectory, although with some minor dips. The support price of $69.29 acts as a solid foundation, indicating potential for buying opportunities near this level. The resistance price of $73.99 presents a target for potential price appreciation. Therefore, a suitable entry price for a long position would be around $69.50, close to the support level, allowing for potential upside movement. A stop-loss order could be set at $68.80 to limit potential losses in case of an unexpected price drop. The target price should be set at $73.00, aiming to capture a significant portion of the potential upward movement before reaching the resistance level. This strategy capitalizes on the short-term bullish outlook for Litecoin while managing risk through a well-defined stop-loss. Based on the provided data for Uniswap, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent upward trend, but the forecast indicates a slight pullback in the coming week. This suggests a potential opportunity to capitalize on a short-term price correction. Considering the current price hovering near the resistance level of $7.838, Entering a short position around $7.80 would allow us to profit from a decline towards the support level of $6.566. Setting a stop loss at $7.90 would limit potential losses in case the price unexpectedly surges. The target price could be set at $7.00, aiming to capture a significant portion of the potential price movement while mitigating risk. This strategy leverages the recent price trend and the forecast to capitalize on a short-term opportunity in Uniswap. Given the Bittensor price data and forecast, a cautious investment strategy focusing on the short term appears most suitable. The historical prices reveal a downward trend, with the forecast suggesting further declines. The price is currently near its support level, indicating a potential for a bounce. However, forecast's consistent downward trajectory suggests that any upward movement might be short-lived. Therefore, a short position would be the most appropriate approach to capitalize on the anticipated price decline. An entry price of $490 would allow you to initiate the short position at a relatively low point, aligning with the forecast. The stop loss should be set at $500 to protect against any unexpected upward price movement. Target price would be $460. Considering the forecast and aiming to capture a significant portion of the anticipated decline, this strategy emphasizes risk management and capitalizes on the prevailing bearish sentiment reflected in the price data and forecast. Based on the provided internet computer price information, a cautious short-term investment strategy is recommended. The historical price data shows a slight downward trend over the past 2 weeks, and the forecast predicts continued decline in the coming week, while the support price at $7.799 provides a potential floor. The resistance at $8.171 suggests limited upward momentum. Given this outlook, a short position on Internet Computer appears more favorable. An entry price of $7.95, slightly above the current price and below the resistance, allows for a potential profit if the forecast holds. The stop loss should be set at $8.05 to limit potential losses if the price unexpectedly rises. The target price should be set at $7.70, aiming to capture a portion of the anticipated decline while staying above the support level. This strategy allows for a measured approach to capitalize on the potential short-term downward movement in Internet Computer while minimizing risk. Given the price trends and forecast for Artificial Superintelligence Alliance, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Artificial Superintelligence Alliance could drop from its current price to as low as $1.18, while the support price sits at $1.141 and resistance at $1.37. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $1.29 would be ideal, aligning with the current price and the forecasted price. The stop loss should be set at $1.37 to protect against any unexpected price recovery. The target price should be set at $1.18, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.141. Price history of Optimism shows a downward trend over the past 2 weeks. The forecast also indicates further declines, suggesting a bearish outlook in the short term. The current price is hovering near the resistance level of $1.61, which may act as a strong barrier for further upward movement. Given these factors, a short position on Optimism appears to be the most suitable strategy. To implement this strategy, we can enter a short position at the current market price, around $1.61. The stop loss should be set at $1.69, slightly above the recent high, to protect against unexpected price reversals. The target price can be set at $1.52, which aligns with the support level and the projected price decline. This strategy capitalizes on the bearish momentum and aims to profit from the anticipated price drop in Optimism. Based on the provided Ethereum Classic price history, forecast, and support resistance levels, a cautious investment strategy focusing on the short term appears most suitable. The recent price history shows Ethereum Classic has been consolidating around the $18 level, with the forecast indicating a continuation of this sideways trend, while the support price of $18.4 provides a floor for potential price dips. The resistance at $19.48 suggests limited upside potential in the short term. Given these factors, a short-term long position with a conservative approach is recommended. An entry price around $18.6, slightly above the support level, allows for some room to absorb potential price fluctuations. A stop-loss order should be placed at $18.4 to minimize risk if the price drops below support. The target price could be set at $19.2, aiming to capture a modest profit if the price rallies towards a resistance level. This strategy prioritizes risk management and aims to capitalize on minor price movements within the current consolidation range. Given the price history and forecast for Ethereum name service, a cautious investment strategy is recommended. The 2-week price change shows a slight downward trend, and the forecast indicates continued consolidation around the $16 price level. The support price at $16.33 suggests a potential floor for the price, while the resistance at $17.98 indicates a ceiling for upward movement. Therefore, a short-term neutral position is suggested. An entry price around $16.50 would allow for a small profit if the price briefly touches the resistance level. The stop-loss should be set at $16.20 to limit potential losses if the price breaks below the support level. The target price could be set at $17.20, aiming for a moderate profit before the price potentially retraces. This strategy acknowledges the limited upside potential while mitigating risk in case of a downward movement. Based on the provided information for Solana name service, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend with no clear upward or downward momentum. The forecast price suggests a continued decline over the next week, potentially reaching as low as $0.206. This bearish outlook, coupled with the relatively low support price of $0.2124, indicates a higher risk of further price drops. Therefore, a short position on Solana name service is recommended for a short-term investment horizon. An entry price of $0.23, close to the current price and above the immediate support level, allows for potential profit from a price decline towards the forecast lows. A stop-loss should be set at $0.239 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.215, aiming to capture a portion of the anticipated decline, while leaving room for potential price fluctuations. This strategy prioritizes risk management, capital preservation, while seeking to capitalize on the bearish short-term forecast for Solana name service. Given the price trends and forecast for Aave, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Aave could drop from its current price to as low as $136. This aligns with the downward trend in the support price of $135.27, suggesting a potential for further downside movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $145 would be ideal, aligning with the forecasted price. The stop-loss should be set at $149 to protect against any unexpected price recovery. The target price should be set at $135, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $135.27. The current Injective price trend shows a downward trajectory over the past 2 weeks, with the forecast indicating further declines. This bearish outlook suggests a short-term investment strategy focusing on capitalizing on the anticipated price drop. Given the forecast and the support price, a short position appears to be the most suitable approach. An aggressive short-term investment strategy could involve entering a short position at $19, the first price in the forecast. The stop-loss should be placed at $20, slightly above the entry price, to limit potential losses. The target price could be set at $18, aligning with the support price and providing a reasonable profit margin. This strategy leverages the downward price momentum while managing risk effectively. Based on the Polygon price data and forecast, a short-term bearish strategy appears to be the most suitable approach. The historical prices show a clear downward trend over the past 2 weeks, with the forecast predicting further declines in the coming week. Price is currently hovering near the lower end of its recent range, suggesting that there may be limited upside potential in the near term. Therefore, an investment strategy involving a short position on Polygon is recommended. A suitable entry price would be around $0.325, slightly above the current price and within the forecast range. The stop loss should be set at $0.335 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.310, aiming to capture a portion of the anticipated price decline. This strategy capitalizes on the current bearish momentum and aims to profit from the projected downward movement of Polygon in the short term.